conversation from this morning, family offices have had a major role in shaping the investment landscape, especially in our part of the world. Let's tune in and learn the different perspectives of various investor backgrounds on how family offices are shaping the investment landscape today. Ladies and gentlemen, allow me to introduce our panelists. Adolf Khaban, Director at RIMCO, Amr Fatayer, Investment Director at Dubai Future District Fund, Jumana Saadi, an angel investor and partner at Silicon Valley Venture and Innovation, SVVI, Shahan Sarkisian, founding partner at Tamar Capital. This session is moderated by our entrepreneur and great supporter, Zafar Yunus, a tech investor, VC advisor, and also partner at Silicon Valley Venture and Innovation. Thank you.
Thank you. Thank you everyone for attending our session. اليوم, I guess DealMakers' main objective is to make deals happen between founders and VCs and founders and family offices. We were talking to the Endeavor team a few weeks back. We were discussing the emerging and the evolving role family offices are having in our ecosystem. If you look at the US, for example, about 50% of the capital is coming from corporate VCs, CVCs. In our region, we feel the family offices are contributing sort of like a similar portion into the ecosystem in terms of funding and support. فاليوم معانا an amazing panel made of different type of investors, all to reflect on the role of family offices in building the ecosystem. بس أهم objective اليوم إنه إن شاء الله نقدر إنه نفسر أكثر to clarify how founders can make business and make deals with family offices. I think this is the main objective. We'll start maybe with a quick introduction for each of you.
Hello, everyone. First of all, thank you for having me in Endeavor. My name is Adolf Kaban. I work for RIMCO Investments. RIMCO Investments is the investment arm of Rashid Al Rashid. Rashid Al Rashid is a large family, Saudi family office. We do all sorts of investments from PE to VC to hedge funds, direct investments, public equity investments, and real estate investments in the US, Europe, China, India, and of course in the region. Thank you.
Good afternoon, everyone. Pleasure to be here, and thank you for having us. My name is Amr Fatayer. I'm an investment director at the Dubai Future District Fund, which is a new fund incubated out of Dubai, backed by the Dubai government. To give me some relevancy in this discussion, I guess, I actually helped set up the corporate venture capital for Majid Al Futtaim and helped run it for 2.5 years. I guess that gives me some reason to talk.
Hello, everyone. I work with Zafar at SVVI. But I'm here today in my capacity as an angel investor and representing my family, where we've made investments in VC funds in the US and in the region. I've also invested in a few startups in Jordan, one of which I was introduced to through the Beyond Capital Angel Investor Network, which I think has been instrumental to the startup ecosystem here in Jordan.
Hi everyone, my name is Shahan. I'm the founding partner of Tamar Capital, family office that was founded 7 years ago now. We have a diverse portfolio, but given that it's run by the second generation, we have a very big, a decent sized VC portfolio as well, with more than 50 direct companies and a number of funds as well. Mainly in the US and Europe, and now recently starting the Middle East as well.
When it comes to VCs, it's easy to figure them out because you have partners on the website listed, and then in most cases they have an IC. But can each one of you tell us about your structure in your family office, because family offices are structured differently, right? So maybe we start with Adolf. How is RIMCO structured as a family office?
So RIMCO is made up of the 5 brothers, each own 20%. And we've got the third generation, but the third generation have nothing to do with the business of the brothers, and they've left it intentionally this way so you don't have any politics. So the way it operates, we've got an investment team that focuses on the region, and I lead that. And then you've got the investment team that focuses more on international investments. But in both cases, you've got a proper IC, so you've got independent board members and you've got shareholders on the IC. And we have a proper setup, whether you're investing in a fund, direct investment, co-investment, IPO, whatever it is, you've got to go through the right process. You've got to prepare an investment memo, make sure that you've done your own DD, not only rely on the DD of the big four or whoever consultant you've appointed. And this is very important because a lot of family offices, what I see is that they just try to tick the box. We do a DD, we get a third party to do something, and that's it. We rely entirely on them. And then and you'll see a 100-page report. They look at it, they throw it on the side, and they ask the consultant, so what do you think? Should I do the deal or not? And this is not how I think it should be done. You should do your own analysis, your own DD. Of course, you need to have a proper independent DD done, but you have to do your own homework. And then once we prepare a proper investment memo, we send it to the IC, they come back with questions. And if we get the green light to go ahead, we make sure that the legal docs, everything is ready and in line with what we
طب Adolf, if I am a founder and I want to talk to your family office, what's your title? Your title, Director of Investments. How many directors of investments? What is the right entry point?
Well, it doesn't have to be directly through me. It could come from an associate. It could come from a managing director. It could come directly from Abdelmonem, who's one of the shareholders. So regardless of where it comes, it's going to go through the same channel, whether the associate gets the deal, I get the deal. We all look at it as a team. We've got managing directors based out of Toronto, based out of Ireland, that are looking also at international investments. But we all look at the deal together, and we try to challenge each other in a positive way to make sure we don't make any mistake.
On structure, and I'll come back to you with a question. On structure, Amir, what have you seen at Majid Al Futtaim, and how was the team structured?
Yeah, so at Majid Al Futtaim, they set up the corporate venture capital at holding level. At the time, it was off balance sheet. It wasn't structured as, what you call traditional VC, where they deploy certain capital per year or allocate certain capital per year. And we had to go through the same capital allocation exercise as all the business units. So each investment had to go through the investment committee, the board approval, and also go through the capital allocation committee. Ironically, at the Dubai Future District Fund, although we're a private fund, but we're actually structured as a private shareholding structure because our backers are government entities. We didn't want to be directly part of the government. We wanted to be privatized, but we set it up as a shareholding structure. So we still have the same quasi-corporate investment committee structure where our board members also have representatives on the IC.
Awesome. Jumana?
So obviously it's, with me, the structure is a bit more lean, but I like to build conviction myself, and I'm comforted by the fact that the round is led by a VC, whether it's in the pre-seed or seed stage round, and I observe what terms they focus on, the valuations they set, and I follow through with their lead.
To be honest, I think you learn as you go. So when I started the family office 7 years ago, it came out of some liquidity. So everything was done, let's say, not well processed. So the first few deals that we've done, some of them which have turned out to be the best, were done completely unorthodox. Really, no IC, no proper IM coming. And that's how we started. And then as the family office started to become more better governance, and with time, we established an IC with non-family members, most importantly. And we set up some criteria based on a lot of mistakes that we've done on how to set up this best IC. So we have a process from finding the deal, which can be brought on by any party, can be from myself, from the CIO, from the analysts. And then we initially have a call and then an IM drafted when the time comes with a DD, and then it'd be presented to the IC. And in our case, the IC has to be unanimous. If there's one negative vote on the IC, then the deal doesn't go through.
Will you guys lead and follow, or?
We've done a few leads, but one that we've learned is that we will never be the only one in the round, because we've done that in the case, and then we've got to the point where investors or founders have relied on us and have not looked at many other investors. So when it comes time for the next round, instead of having a cap table with 20 investors, they have one investor. And then if we decide not to co-invest, then the company essentially struggles to fundraise. So we don't lead anymore unless it's a deal that we can specifically add value, and only if there's a big cap table behind us.
Jumana, you mentioned you follow, so you do require a lead VC. Adolf, do you guys lead the round or do you just follow?
No, sorry. Our typical structure is we prefer to follow in general because we prefer our ideal investment strategy is we'd rather invest at the fund level and then have co-investments alongside the GP that we trust that we've worked with in the past. Because first of all, we don't have enough resources. Like I said, we've invested across the world. We have a global mandate. So we don't have time to go and lead around and then follow up closely with management. That's not to say that we haven't done direct investments, but we realize that it takes a lot of resources. And we could potentially still do direct investments, but if you're asking me what's our ideal philosophy in terms of investments, it's mostly to follow some GP that we trust, where we have invested in their fund, and they're offering a co-investment opportunity.
So what that sounds to me, if I put my founder hat on, like, do I really need to talk to family offices then if your guys are not leading? Or do I secure a lead and then come to you? Or when is the right timing to approach you?
Like I said, it doesn't necessarily mean that we don't do direct deals like we've done in the past. And sometimes what we do is if they reach out to us, we could potentially, because we've invested in most of the funds in the region, we could do that connection. We can help them reach out to these fund managers who we've worked with in the past and we like and we trust and we know they can add value to them, whether it's in terms of value creation, in terms of connecting them with the international VCs for the next rounds, international investors. So we do set up that if we like them. But the key thing is we're looking for dual investments, not just any type of investment. So once we are convinced ourselves, then we can make things happen.
Amir, from your...
Can I just add so you do need family offices in the sense that family offices typically will come in for smaller tickets at a seed round. They're typically very friendly, and they will almost always follow on, and at least in what we've seen. So family offices, I think, have a real value. There are people that you can talk to that are approachable, and that a lot of the family offices come from actual businesses, so they always have some advice and recommendations moving forward. And then, like Adolf said, the networking aspect is tremendous, and we all have access to funds and other family offices and other wealthy angels that have an ability to invest.
So maybe we cover this point. So you guys both invest in VC funds and invest directly. Can you tell us about your mandate for investing in VC funds? Maybe Shahan, like how many VC funds, or like what do you look for when you invest in a VC fund?
Yeah, so honestly, it's ever evolving, right? Nothing that we say from day one is maybe relevant in 5 years down the line. We started with a more direct strategy, so we've invested in a lot of direct companies, and then we had funds only in specific verticals. So like, I don't know, like a Web3 vertical, or a very specific, like, or LATAM vertical, very specific verticals that funds can offer. And as we've evolved in the family office, we've realized that we can't do everything, right? The family office cannot make money with 50, 60 employees, right? So essentially, you do have to have more fund involvement, and then you can pick and choose. So maybe more fund involvement with more co-investments and less only direct deals, let's say.
Jumara?
Yeah, so from my perspective, I think I see the universe of funds as regional and US and Europe. I like investing in funds just for, number one, it's the time spent on due diligence, which it's less time consuming. You have It's a diversification play where you get access to 35 to 40 portfolio companies. You learn a lot from investing in funds, what the managers are doing. And then, like Shahan said, they offer co-investment opportunities. So in some instances, you can invest via an SPV with the fund. And I like that element a lot. From an industry perspective, I think generalist funds, and I look for emerging managers. I guess maybe the ticket sizes are also smaller, but I do believe that emerging managers can return good returns, and then you build a closer relationships with the GP.
Same question. So we obviously have two different strategies. We have the direct and the fund of funds. For us, we have a slightly different objective. It's the economic development of Dubai, first and foremost. So we're encouraging more capital to back founders and also startups that are either operating or incubated in Dubai. But it is still split between incumbent versus emerging fund managers. We do want to back emerging fund managers. We want to educate and bring more, let's call it more options for founders in the market. Today, or let's say 2 years ago, when you had to raise, you probably knew the 10 people you reach out to, and that's it. And if someone said, yes, I'll back you, you didn't really have much of a choice to say yes, or I'll take a different term sheet. We're trying to bring more emerging fund managers to operate in the market by backing emerging fund managers, but at the same time, we don't want to ignore the old guards of the market, and we still want to back them up to continue operating, especially once they expand their fund and become a 350, 500 funds and start actually operating in later stages, which is important for the full ecosystem.
To be honest, in general in this region, and this could be a controversial point, but fund managers like PE managers specifically, they haven't done well. We've invested in most of them, and you've seen what happened to Abraj, to all the other private equity, maybe not to the extent of Abraj, but a lot of investors, family offices, I speak to them, they've had their fingers burned, and they do not like to rely on fund managers specifically in this region. They were like, you know what, this is our own backyard. We know the region. We have access to deals. They'll hire investment managers, investment directors, and they decide, you know what, let's not just give our money to someone who's gonna make us lose money. Let us be the decision makers. So you see a lot of family offices have set up their own investment offices, and they're doing it themselves. Now, with VC, it's a little bit different because it's new, because maybe family offices do not understand it, all of them. They have actually invested with fund managers, and some of them have actually done well. And in general, why we as family offices would like to invest in a VC fund, it's because it's a numbers game. It's the same thing with PE, but more so with VC. If we invest in one VC company ourselves, there's a risk that we might lose our money. But if you invest in a portfolio of, through a VC fund, to a portfolio of 20 companies, 2 of them are more likely than not going to break out. You're going to make a lot of money on these as a fund. 10 will do okay, and the rest will probably be loss-making investments. So overall, it makes sense to invest in a VC fund because you'll end up making money because of the portfolio diversification strategy.
So if we look at VC fund managers, they have 3 main functions: deal flow generation, looking for companies to invest in; then selection, picking which ones they believe are the winners; and then portfolio management. Let's first look at deal flow. How do you, as a family office, get your deal flow? Maybe Shahan, how do you usually get the deals?
Yeah, so for us, as opposed to what Adolf is saying, we use fund managers for the region because we don't have direct access in the region, although we're a regional family office. And then in the US, we have we've launched an arm. It's been 5 years that do only VC sourcing essentially. So they're based in San Francisco, and all they do is sourcing. So this is how we do. And then when we have the good founders, they basically introduce you to other good founders. And then in Europe, we use a company that provides us venture as a service. So essentially, their objective is to provide deal flow and due diligence. So we have a target with them. We said we want, let's say, focus on agri-tech in Europe, and they essentially source everything for us. Because let's like I said before, we don't have the resources to go and find the best deal flow by ourselves.
Jumana, you mentioned beyond capital, but how else do you also look for deals?
So I think what's nice about family offices is that they're very collaborative versus some VC funds that are very competitive or they compete against deals. So in fact, one of the regional fund that I invested in was referred to me by Shahan. I knew the GPs, but Shahan telling me that they've invested and his view, he had invested in their first fund, that reiterated my confidence and made me want to speak to them. So the network is very important, and I think our region is small, so it's good to connect with the various family offices. I like Magnet also as a platform, or I'm not sure if a lot of people are familiar with them. But they have, you can read about all the startups, you can connect with founders there directly, you can see where other VC funds and family offices are investing. So, yeah, I do that.
Amr, how do you deal? I'm sure a lot of people come to you guys, like you
Yeah,
have
I mean,
amazing PR.
We're in a different position in that we have DIFC as one of our backers and anchor investors, as well as Dubai Future Foundation. So we get all the fintechs that went through the DIFC program and licensing, as well as all the future accelerator off the bat. But in all honesty, it's very similar. It's network and people who we know, founders that we invested in the past, people that we know within the ecosystem. We like to collaborate, by the way. So we do actually collaborate with a lot of the VC funds, ones that we backed and ones that we didn't back, and share pipeline, because ultimately, if I win, everyone should be winning, right? Because it's for the benefit of the ecosystem. There's no, it's not one winner takes all. It's if we all succeed, we can all succeed together. And that's the approach that we like to follow.
Adolf, what has worked best for you guys in deal? Like, where did you get the best deals from?
To start with, we get so many deals from so many sources. It's a bit tiring sometimes. Like, you don't have time to screen all these deals. And that's key, because you can't have a lot of time to spend on every deal, prepare an investment memo. You need to really quickly screen through them, decide which one makes sense, which one is probably, we're probably gonna kill it. But what we always do is we summarize all these deals and we send them to the IC and the shareholders, because they might have a different opinion. They might know the shareholders, they might know someone connected to someone, and they think, you know what, I think there's an angle here, let's just look at this deal. So even if I decide I don't want to do this deal, we still summarize it, prepare a nice PowerPoint presentation, send it to the IC and the shareholders, just to see if they're okay with that conclusion. Sorry, what was your question again?
Where did you see the best deals?
The best deals. Usually the best deals, you have to run after them. They don't come to you. And that's from my experience. It really, I can't think of a single source that gives you the best deals. It really depends on the opportunity. And when you look at an opportunity where you see, and a lot of times I just ask one question at the beginning. I'm like, what's the valuation? Just let's cut through the chase. If you tell me it's 20 times EBITDA in a market where we know public equity companies are trading at 10 times, I'd be like, forget it. I don't want to even look at it, because I know we're not going to pay top dollar for any company. So then I start looking at the key fundamentals of the business. Okay, tell me the top line. Is it profitable? Gross profit? Is it growing? Are we valuing it based on GMV and some crazy valuation that doesn't make sense? So you look at these key metrics, and then if overall it makes sense, then we start drilling down into more fundamental things. And usually it happens with a call with the founder initially to understand the business model.
You said something quite interesting. So I was on the founder side, and then I crossed over to the VC side, and the biggest insight for me was just like how difficult deal flow is to deal with. You have your inbox, getting like hammered with like startup emails every day. So what advice do you have for the founders in the room? How can they, cut through the noise and get your attention?
You're picking on me.
Amr.
Thank you. In all honesty, one thing I appreciate the most, and I did the same journey. I went from investment into startup into investment. So I came back to investment, I guess. Be authentic with your message. One of the biggest challenge is reading copy-paste messages and buzzwords, right? If I open another, I don't want to say anything about any specific industry, but let's say something that's very common and repetitive, and there are so many startups doing, and it's the same messaging, same buzzwords, same key strengths, key weaknesses, and you just get bored of it after a while. But being authentic, saying how you as a person and as a team can actually pull off what you're trying to pull off and build what you're trying to build, and being honest is probably what differentiates a good, investor deck versus not. But at the same time, be very resourceful. Sending a cold email alone, as you said, Adolf, it might get lost. Sometimes it will get lost in the traffic, in the volume, and it's not because it's a bad business, but indirectly we want to see the hustle. Especially if you're investing in early stage, you want to see that people are willing to build a great business, present a great message, but also have the energy to try to execute on it. So it's a combination of all. So yes, sometimes we'll get back to you immediately, but in times where we don't, generally assume we just don't have the capacity. Don't always assume the worst, that it's not a good business or we dislike the business.
Just one point to add to that about being authentic. I must have met maybe around 50 VC funds in the last year and a half, and they all pretty much have the same message. We invest early on, early on. It's almost like when at university stage, when the guy had an idea, we go back there. Like it's the same message, it's the same process. They all say the same exact thing. Try to be a little bit more authentic and try to follow up on what you say. So a lot of times they just send an email and then forget about you. They don't even follow up, or even if they follow up, it's just a meaningless call. Maybe it's a group email sent to everyone. There's no authenticity.
So I never figured this out. Like, how many emails is a no? Like, if I email you once, you don't reply. Because a lot of the investors in the region, they don't reply to the first email. Is that a filtration tactic?
You have to make us feel guilty, basically. You have to keep following until we're like, shit, this guy has called 10 times. You know what? I need to go back to
It's a thin line between guilty and stalking. But yeah, no, look, in all honesty, it's a good point, because if someone sends too many emails, can't be bothered.
Adolf just killed his inbox. Everyone's going to email you 10 times now.
But it's also a very valid question. For me personally, I think, submitting an application and following up in a couple of weeks is not a bad thing. And if you don't hear response, then probably it's a bad investor for you anyway. If that person is not willing to respond to your email twice, then there's something about the investor, and maybe they're just too busy. And too busy means also he's a bad investor for you, because he cannot invest in you today. True. So if you want to actually execute on your round in the next 3 to 6 weeks, you need to find the right investors, and also find the right investors who have available capacity to diligence and analyze your business. So it's not black or white, there's a lot of gray. But yeah.
If I, just to touch upon that, if I put my SVVI hat on, we speak to a lot of family offices, and I think the quality of family offices in the region has really improved, and I like the ones that are very specific in their mandate, not to say that they will only invest in what's on their website, but as a founder, you should do your homework and actually research what companies they've invested in, what funds what stages they look at, and that will help you, just to know whether you should be approaching them at this stage or not. And the other key message is that family offices or investors are watching you. So maybe today, one of the angel investments I did, I had met the founders at a DealMakers event. And then a year later, I met them again, and I saw how they had pivoted their strategy. Anyway, so sometimes it's not the first interaction. You might not get that check from the first interaction. So just know that the investors are watching, and they will they'll ask you, what have you done in the past year?
I'd like to add a few things. For me, unfortunately, the networking is the best way to get deals. I don't like to admit it, because a lot of times you remove credit from some of the great founders, but I'm more likely to look at a deal if it's come through either family offices or funds or friends or whatever. So through my other businesses, I also fundraise, and the way I say it is that I'm always fundraising. So 100% of my time, I'm fundraising other than doing other activities. So networking is such a key part, and being able to, going, do your homework, find a second, third degree connection, connect to that. Try to do anything to get to these people that you want to get to. And then if you do get to them and they don't answer, for me, nagging works. So if someone is really relevant and he sends 2, 3, 4, 5 emails, and then maybe I'm busy on something else and just haven't had the time to come across. But if a founder knows and then sometimes he nags, and a lot of time it works. I mean, the persistence of a founder is super important.
I have a tactical question, also for the founder's sake and for my sake. I want to understand this as well. So sometimes I meet the CIO or a team member in a family office. We have a good conversation. Then a friend of mine tells me, you know what, if you don't meet the principal, if you don't meet someone from the family itself, nothing is going to happen. Is this true? And what's your advice? If a founder has access to both, what should they do? Because sometimes it's a bit sensitive as well. Like you had a conversation with a team member and now you have access to the principal. You don't know if that's going to be overstepping the guy you've been, or the lady you've been talking to. What's a good judgment call here?
It's a very good question, actually. In our case, first we have to be convinced as the investment team. If we are not convinced, like I said, we're not going to prepare a detailed investment memo, send it to the IC, because at the end of the day, it's our credibility also. What you don't understand is that I am sticking my neck out for you to send the investment memo to the IC, and if they feel like this is a rubbish investment, they're going to laugh at me and potentially fire me if I keep doing that. It's like, what are you sending us? What are these rubbish deals? And they're not going to trust me as an investment director in the future. So it's not only about overstepping someone, it's more about convincing that someone that this is a good deal. Now, if you've got access to both the shareholders and the investment team, you could potentially talk to both. I don't know, in some cases, if someone is emotional, they might actually not like it. In my case, I wouldn't mind it because you'll be helping me, because you'll be trying to convince the shareholders or the investment committee members and myself, so it'll make my life easier.
Shahan, we were having this conversation off stage. You're running your own family office. How is that different?
Yeah, I mean, it's similar to what Adolf said, because I have the people that work in my family office are far more qualified than I am in those respective roles, right? So if I bring a company that's not relevant or not good, essentially I'm also losing my credibility in front of my team. So there is some worth in having a good deal. I mean, we have an IC, and no deal can get approved or fast-tracked without getting an IC approval. It doesn't exist, at least in our family office. So yes, you have a better chance of the deal going to the next stage if you contact the CIO or myself. But in reality, if it is a good deal, it's going to come through wherever it comes from. And we each have a responsibility to make sure that we bring in the good deals, because essentially, like Adolf said, it looks bad on your own personal reflection.
In terms of selection, to move to selection, so discovery, we've covered it, selection. How fast can you guys write a check? What was the fastest, and what's the average time?
2 weeks. 2, 3 weeks, the fastest.
What are the steps?
First is an analyst call with the team. If the analyst likes it, he passes it on to our manager of venture. When the manager of venture likes it, we typically start writing an IM. If it gets forward, potentially the top members will do a call or not, depending on how we're advanced, and then I'll go to the IC. This is with an IM, of course.
Amir, how does it run on your end?
I'm trying to avoid answering this question intentionally. Look, in all honesty, we have our own SLA, service level agreement, that we set up for the team. And our aspiration is to have a 4-week cycle. Obviously, sometimes it's out of our hand because given that we have government shareholders and government IC members, we have to also operate with their availability. And today we set up a monthly cycle of investment committee meetings or sessions. And sometimes you're lucky, you actually meet the founders 2 weeks before the IC meeting. Sometimes you're very unlucky, you meet them a week before, which is after the submission, which means you have to wait 5 weeks just to hear back. and sometimes there's additional top-up analysis. So let's say on average it takes a month or two, but our aspiration is to get it to 4 weeks.
Jumana?
So obviously in this space you need to move fast because otherwise the deal is gone. I like to do my own due diligence. I like to look at the cap table just to see the cap table hygiene. And I think when I like to invest, I like to see that there's different types of investors. So angels, family offices, as well as VC funds. For me, that's a positive signal. And depending on the industry that the company is in, through my network, I like to speak to some advisors that will, give me some advice, that will give me their knowledge on the space itself. So I'll do my homework, but I also like to see what others that have invested in similar companies in that space think of, of the industry or the product itself. But typically, I'd say like 4 weeks also to a month.
4 weeks.
Yeah, 4 to 5 weeks.
Adolf, with your structure,
I think let's be realistic. Family offices typically take longer than maybe VC funds, but we've done some deals in 4 weeks, and some deals, I personally, it's taken me 3 years to close the deal. In the Middle East, sometimes things take a long time, but that was more on the private equity side, not VC.
Adolf, what is the range of checks you guys write?
We've done checks as little as 2 million all the way up to 50, 100 million. So it really depends on the deal, on the opportunity. But the larger ticket size are mostly for funds.
مفهوم. Amir?
Much smaller than that. We have 2 programs. We have a build program, which is for pre-seed and seed, and we typically put 250 to 1 million, depending pre-seed or seed. And then we have a catalyzed program, which is for Series A on, and we put anything between 2 to 7. We're planning to increase them once we raise the rest of the fund, but for now, that's where we are in terms of ranges.
Jumana, you're on the earlier side, but what's the
So I
range?
guess with directs, obviously it's a smaller ticket size. And with funds, I like funds with a flexible capital call structure, so it could be over a 3 to 4 year period. So yeah, obviously with funds, I would invest a larger ticket than if I were to go direct.
You're talking VC only, right? Our smallest ticket for a pre-seed could be 150K, and then our biggest ticket would be 3 to 5 on a Series A, 3 to 5 million, typically.
هلا Shahan, on that point, most VCs are VCs, so they just invest in VC fundable companies. But when you're dealing with family offices, they have a toolkit of investment styles or mandates. So you invest in PE as well. How do you say this is more of a PE deal, this is more of a VC deal? How is your approach different in those 2 cases?
This is a controversial topic after what they're talking today, but I've actually set up a separate team with different founders with a PE strategy where we fundraise outside capital. So essentially what happened is that we've seen a lot of focus on growth, like they were talked earlier, and not enough focus on profitability. And then we've shifted a lot to our thinking to make sure that, and actually we've always had that thinking because we come from a background of entrepreneurial family, right? So we've always targeted, we would have never invested in a Facebook of the world, unfortunately, because as a family office, the profitability for us is extremely important. And then it's becoming hard to justify companies that have extravagant valuations when you're able to buy profitable 3 to 5 times EBITDA businesses. So you need to find a right mix. I mean, the VC has to have the VC deals have to have a clear profitability path in sight, and not just focus on growth. As opposed to funds, unfortunately, I'm never going to be able to invest in these super heavy growth companies that are never going to focus on profitability. It's just not something we can do. So we have a more PE approach, let's say, to investing.
Adolf, you also do PE.
Yeah, just one point on this one. A year ago, I was talking to one of the founders, and I'm telling him, how are you valuing this business? It was something like crazy number, 3 times GMV. And I'm like, this is crazy expensive. Your take rate is so low, GMV 3, it's like you have to stop thinking the old ways of doing valuation, Adolf. Like he started giving me an education. And I'm so happy now that everyone's talking about profitability, or at least the path to profitability, unit economics. Does it make sense? Because it really became a crazy game of let's see who can increase the valuation for no reason. Like even a multiple of revenue sometimes doesn't make sense, let alone GMV.
Those 2 years are over. Those 2 years are over.
Yeah.
When it comes to other investment styles, do you do debt or do you do?
We've done some investments in debt, but they haven't been successful through the funds. Like the funds themselves in the Middle East, what you see is you're capped at the upside. So even if the company does really well, you'll only make a limited amount of return. And then when things go south, you can't really claim back your assets because in many countries in the Middle East, the restructuring or bankruptcy is not that great. So you lose a lot and you're limited on the upside. So we haven't really done that in this region.
And Rimco and Rashid family have operational businesses as well.
Yeah.
When you're looking at a VC investment, does it have to fit a strategic profile, or does it have to have both financial and strategic kind of angles?
It doesn't have to have a strategic angle, but if it does have a strategic angle, that's always a plus. And sometimes actually, some investments on a standalone basis don't make sense, but then when we think of it from a strategic angle point of view, then we might actually consider investing in them.
At MAF, your days at MAF, it's super tough, right, to get both right. What reflections or insights, advice do you have for the founders when approaching strategic investors?
Yeah, look, I mean, obviously it was very tough because one, it's off balance sheet, two, competing on allocation, and three, competing on synergy extraction. For founders, I think reaching out to big organizations like the MAF, Al-Hukairs, Al-Jumeih, and the likes who have synergies for your business, maybe don't go too early when you're too small, because they might not give you enough attention, given that their business is so large. They need to focus on day to day, and when you come to them with $500,000 revenue, they would just look at you saying, once you grow, come back to me. So don't waste too much energy upfront unless, and this is the big unless, there's an immediate direct need for your solution to save them costs. Because that's the easiest thing to unlock. Cost, very easy to unlock. Revenue, very hard to unlock. At a small stage at least. That's my experience.
Shahan, you also incubate some projects in your family office. Do you require like a strategic fit, or do you do both?
Not necessarily. We have we have a US program where we incubate young startups specifically in the design and product market fit aspect. It's just like a workshop that we do. We help them and essentially back them. But in our case, no. And I like a lot what Amir said actually, that it's very difficult to have a strategic unless there's a cost aspect. I love that. That's great.
We're going to open it up to the audience if you guys have any questions.
I can't see that side because of the light.
Thank you. Thank you all for this amazing panel. Thank you for the talk. I have a question. From a startup point of view, do you guys think that the conversation with family offices should be different than when we're talking to VCs? And if yes, what's the difference in the communication workflow?
Sorry, I missed the question. Can you repeat it?
Yeah, so what I'm saying is, from a startup point of view, when we're talking to VCs, we're talking there is a certain way of communicating to them, the way we speak to them, what we need to show them. Do you guys have extra requirements as family offices because you guys are more into the business and you deal with the business hands-on?
For me, like I said before, the most important is make sure if you can, to have someone valuable to recommend you to me, to the family office, essentially. I mean, this is come back to networking and the importance of networking. If someone vouches for you, or a VC or an angel that I know that vouches for you, then we're very likely to look into it. This is the easiest way. And then, we have typical processes, right? The company has to make sense, etc. But the best way to get a deal quickly to us is through a network of people that you know, that we have in common.
Yes. Yeah. Hey guys, thanks for the great panel. So my question here today is comparison of VCs versus family offices. And some of the things I've seen is that typically a VC will have an advocate all the way taking the IM to the IC and would have a vote. So one of the things is you see that family offices, the advocate or the partner or the director working on the IM doesn't have any vote in the IC. And that creates a dislodgement because you've built a relationship with the director, he knows the founder as well, but then when you come and present it to the IC, he doesn't have a vote on it, right? So do you guys see this as an issue, especially that you've built so much rapport and relationship with the founders that you don't get a vote on or a say on what goes? Thank you.
Yeah, I can start with that. I don't know if I'm answering your question, which is a great question. So the way we do it is that our IM is very standardized. So we have we have a grading scale within the IM. So when you fill up the IM, every section, there's a description and there's a grade as well. And then the grade of the team is probably one of the highest grades, especially in earlier stages. So if we have to make sure to be able to reflect that in the IM, and given that you have an IM that is so focused on the team itself, typically it's able to be translated, and then the IC could ask for a call with the founders, which would then make sure the relationship, the values are there.
I'll try to answer it. Although we're not a family office, we do operate in a similar structure with an investment committee. There's no worse feeling in the world than talking to a founder, believing you're going to invest in his business, taking it to the IC and getting a rejection for the fund manager as well as the startup. So in all honesty, it's our job to set expectations up front that although we're taking everything or something to an IC, it's not a guarantee. And what we need is an open channel of relationship with the founders to build the best story to get it across the IC. So it's the common alignment of positioning the business in the right light. And at the same time, we need to communicate, or the funds and the family and people managing funds need to communicate up front and saying this is what's coming up, to pick up on early red flags. So it's as much as our responsibility as it is for the IC to be more informed. That's just my view.
Sorry, I agree with Amir. It's frustrating when you have to bring up an investment to the IC and then they reject it. You feel honestly like an idiot, like you've wasted all this time working with the founder and then doing all the work, and then they're like, oh, sorry, we're not investing. Especially in this circumstance now. Now, because of what's happened, the market meltdown and everything, they're being very tough, the IC, on us even. The tone from the top is tread carefully. We don't have to do investments now. Let's wait and see what's happening. Everyone's scared. We have commitments to the GPs that we've already invested in for a number of years. We have to continue investing with them, even if there is new funds, because we have the relationship. So it's becoming a little bit more difficult, the environment in general. So like Amir said, it's a win-win for both of us. If we are talking to you and we like you and we want to invest with you, we're actually, our objectives are aligned, but sometimes, unfortunately, the IC see it in a different way.
Hello, this is Abid Mosley from Tabflow. We're a tech recruitment platform. So my question is about reaching out to VCs. Amir mentioned that the emails has to be authentic, but there are sales tools where you can automate personalized emails. Is this a big no? Because sometimes it's not optimal to reach out with a personal email to 200 VCs or even more. So what do you think about this?
So, do you mind if I take this? I mean, to me personally, yes, it's a no. even when I was at a startup, I made sure I didn't just look at the fund, I looked at the fund managers, looked at which ones of the fund managers are actually sitting on boards of similar industry businesses to understand not just which fund to reach out to, but which partner within that fund to reach out to. If you want to give yourself the best chance, you need to put as much effort as the VC would to analyze you. So it's a two-way road. It's give and take. For every hour you spend putting the effort, you probably will get better responses. It's just my own view.
Next question.
Authentic LinkedIn messages work. Random LinkedIn messages saying, I'm the gift of God's gift to you, come please connect with me, no. But if it's an authentic messages, in all honesty, I do accept. Not all of them, but the authentic ones.
By the way, just side note, my brother has a startup, and he was at the conference, and he met Mark Cuban there, and so Mark Cuban told him, email me with your startup, and then so he talked to people, and they said that Mark Cuban reads every single one of his cold emails, and you have to make your email punchy, and if your email punchy, he will respond to you. So, like Amr said, having a punchy and well thought out email is, I mean, he spent us almost a day drafting that email. I hope he answers, but so yes.
No, absolutely. I actually check every message. I don't respond to all, but absolutely right. It's the same thing. If it's punchy, if it has something, if it's actually directed to me personally, I would respond, more likely to respond at least.
So we're having the last question now, so we can break for lunch.
Okay, my name is Omar Aqil. I'm from Basket grocery app. Hi Zafar, how are you? Alhamdulillah, salameh. Nice to see everyone. I just wanted to ask actually because the grocery business was very controversial in terms of profitability. So we were growing the first 3 years very well, and then last year what we've done is we've focused on profitability. Alhamdulillah, Basket's profitable today with 8 to 9 million GMV, and now we're planning to go back to growth. But my question is, when I sit with some investors, they say, why did you focus on profitability? We want to see growth. And then other investors say, why are you focusing on growth? We want profitability. So I want your take on that. Thank you.
Okay, can I take that? Well, I guess it's a blurred line, like you said. Investors do want to see growth, but at the same time, they want to understand the unit economics. They want to make sure that the unit economics make sense. So if you've already demonstrated to me that you can be profitable, and the reason why now you are incurring losses is because you're expanding to new territories, and then you show me that in the home city where you are, you're actually profitable, and you just need some time to go to other cities or other geographies or introduce new products, then I trust that this guy can be profitable. He's already profitable in his home country. The unit economics make sense. He's just expanding to new geographies. Then I think in that case, expansion makes sense to everyone, and investors would be happy to continue investing with you. Because from our perspective, we never invest in a company that doesn't have a growth opportunity. And more importantly, the management to drive this growth. So if you cannot demonstrate growth, then I'm not going to invest with you to start with. But profitability is also important.
I just want to say two separate things. First one is not every startup is VC backable, because venture capital intrinsically means very rapid growth. Now, it doesn't mean it's about startup if it's not VC backable. It just means it has different audience that can back it. Just wanted to put that up front. In terms of growth versus bottom line, I believe in both. I believe you need to focus on your growth and your bottom line at the same time. But also it depends. It depends on what unfair advantage do you have today. Do you need to capture it before the competition catches up with you? Are you entering a new market that no one operates in? Are you launching a new product that you have exclusivity to for an X period of time? Then yes, it's all about growth. You need to capture the market before other people catch up to you. But if it's a question of entering a market that's already saturated with 5, 6 different competitors, focusing in growth is a race to the bottom. And that's what happened in many different industries where capturing market means discounting heavily and losing more. So it's not always black or white. Sometimes it depends on your situation. And in all cases, you need to look at both. Capturing growth with the potential to fix your bottom line is as important as growing. If you're just capturing growth with no opportunity to flip the narrative and be, EBITDA positive, then yeah, it's a bad growth. And we've seen how the correction in the global markets today hitting companies that are focused purely on growth on the top line and no fundamentals in the bottom line. I think it was mentioned in the first session. It's all about the fundamentals. It's not about today's unit economics, it's about the fundamentals in stable state, which is what's more important to me.
Amir, I think you mentioned a key differentiator also between talking to VCs and to family offices. VCs are only interested in VC backable companies. They're looking for that 50x, 100x, return on their investment. That's the only way it would make sense to them. But when you're talking to a family offices, they actually have more in their toolkit. If they are convinced this is a scalable business, it doesn't have to be VC scalable, they're still in. If it has synergy with their legacy businesses, they're still interested. And I feel that's why I do encourage founders to talk to family offices. Just the last point I wanted to make today is the size of family offices in our region is probably multiples of the VC money that's available to founders and entrepreneurs in our region. Imagine with all the Saudi and UAE government money flowing into VC funds, still I believe family offices have much more dry powder sitting on billions of money to invest in good businesses that don't necessarily have to be VC fundable at this point. So I would encourage you to approach the family offices in the event today. I think Endeavor made a great effort to bring some of the most prominent families to the event. Feel free to talk to them, approach them. Their job, just as VCs, is to look for good deals as well. So when you talk to them, it's not مش هم اللي عم يعملوا لكم خدمة. أنتوا عم تروحوا لهم ب a good deal, hopefully, and it's their job to look at your deal and hopefully to invest in it if it makes sense to them. Thank you so much for attending today. Thank you for our panelists for your contribution.
Thank you, everyone.